Greetings, market rebels. Welcome to this week's sector situation. It is actually Friday, May 31st, 2024. It's about, I think, around 3:20-ish p.m. here on the East Coast. I'm Wayne, and I'm just on the heels of wrapping up the macro measure video, going to get into the sector situation, going to flash the trustee disclaimer first, followed by our trustee intellectual property rights notice. And then finally, I'm just going to flash this week's slide from macro measure. You can see pretty scaled down. In fact, I think that we'll be pretty scaled down for the sector situation as well, because there's not a lot. Let me just stop the share and we'll restart it, just reposition in a minute. Just want to get this stuff out of the way. And going to bring up our sectors first, but this will be a very brief look because there's just not a lot to really share on this larger view. It might be harder to see, so I think I'm just going to go on a bigger on our larger view than this one. This one's kind of the grid of 12 we often start out with, and this really just looking across the board, you're really in the middle, right? You kind of have all middling RSI readings. The main exception is this XLU, right, which is kind of funny in a way, but it is what it is. Apparently the demand for this, that, and the other thing that has to do with crypto, AI, and all the rest of it, all the rest of the modern fun that we're experiencing is all being reflected in XLU getting bid up very strongly and having a nice little corrective action there in XLU. And then it put a decent little bounce together. So kind of behaving really well. It's the only thing that's even in the 60s on our grid of 12 in terms of RSI. So on that note, I'm going to move this out of the way. We should have XLE behind it, which is the one I normally start with to go in order. But this is very interesting because we could argue, right, what's good for the consumer, what's good for the market. I think overall, healthy energy demand is good for the market, but if it keeps hurting consumers that are already feeling the sting, maybe it isn't, right? So maybe that's why it's been locked in this sort of corrective action and for a while now, really almost 2 full months. But anyway, having noted that basic stuff there, this was very interesting because what they did was they took this through, I think, a key level here on the 38.2% orange dash line in terms of retracement. They put a little breakdown together and then quickly reversed it these last 2 days. So that's usually a good sign, right? That the gang is cleaned up some, let's say, weak hands, and now they're trying to move things back up. It seems clearly, and like, boy, it already did it to me on the switch over to the percentage. Get rid of that, get real levels to work with here. But you can see that I've had a resistance line there, got that line there. We've got another one that I added up here that we can work with. Oh, geez, it's doing the old, I'm only clicking once, but it's acting like I'm doing a, wow, that is just tough. That is very tough to deal with here. All right, let me see. I'm trying to just get this a little bit better positioned for us. So I think that's pretty solid right there. I would like to extrapolate it, but I'm afraid to touch it. But that's going to be right in the near future. That's going to be right near this 50-day. So if this does manage to take out the 20-day there in light blue and move up right near the 50-day, which would also be near the 23.6% retracement level, that's going to be, I would think, some kind of a battle there. I guess this is really assumes just in a neutral environment. We're not really talking about geopolitical erupting over the weekend or something like that. But without any strong news, I'm thinking it gets up to there if it can take out this 20-day, and then we'll see how it behaves there, right? I think you start feeling better if it can get there and get above there and start holding. Certainly, if it can take this high out. Right now, though, you have a string of lower lows and lower highs overall that you can see visually. It does look like a pretty routine, right, correction. There's nothing really awful about it, right? It's pretty orderly correction, so we can't really complain too much about it that way. The longer-term SMAs are holding intact. It's obviously below the shorties, including the 50. So it's trapped in that sort of, is it bullish or bearish? And we don't know yet, right? So that's what we want to see. We want to see it resume, start acting better, or right, if it's unable to do that, not good, right? Not good. That means that this little fake breakdown was only really used just for short-term trading purposes, not bigger picture purposes. And it's maybe then rolling back over towards the 200, 100, 200, and so on. Not a good sign. I think right now that is a little tough to call. To me, right, I think you have to be flexible there. I could easily flip to bull if I see some good action there, and I could flip to bear. And I think the charts that I like to keep that are not on screen, they are just various things. They're telling me the same thing, that you're in that state of be ready to go one way or the other, but don't really force it, right? Just let it happen, because these charts could turn to a pretty strong bullish complexion fairly fast if with some just a little bit of good work, and it could actually get a lot worse more quickly too. So that's not always the case. And so, yeah, you got to be on guard there. But that participating and having higher demand might be a very interesting discussion. Something about, right, is it really good for the market? Is it really good for the economy? Is it really good for consumers? Is that really a good sign, or is it not? Right? I don't know. I really don't know the answer. Like to see people that are with data talk about that. But we talked about this in macro measure because I felt like it was important. XLK is what we'll move on to. And this has really been, one of your lead dogs, not always, but in general, right? Obviously, technology. And we had a false breakout. And like I said in macro measure, not what you want to see, right? You don't want to see new all-time highs being made. And in an economy that's, I think, hard to trust, in an economy that's got some stagflationary warning signs appearing at the very least, and then you just quickly roll over. And remember, this was narrow, right? You really weren't seeing a lot of sector participation. We noted that last week. That's why we started to think there were issues cropping up that really developed further this week, because this was just kind of alone with just a few things, the SMH, XLC, those were still trying, but a lot of other sectors that already sort of caught the train away from the bull station and we're headed in the other direction. So now, right, we need to see, can this put in a higher low by holding the 50 there in gold, right? You've got, higher highs still intact and a higher low to work from maybe, and maybe you then try to roll back up towards your high and attack it and see what you can do, right? That would be our next way of looking at that. On the flip side is if it can't hold the 50 and 100, which are fairly bunched together, that would probably mean, right, the sell-off that we started to see last week in other sectors that sort of spread out into XLK and XLC this week, that would probably mean that it's still there. It's maybe picking up steam and there's gap closure potential. So I think you may as well just look at it and say, breaking the 100 to the downside and then getting back above the 20 to the upside, you're not out of the woods in either case where you could be a super confident bull or bear, but you'd start feeling better about both if you're somewhere above or below those respective SMAs. So there's that factor. XLC, right, this is hanging in there. You've got to give it credit. It's probably hanging in there better than most of the other sectors. It's not that far removed from its recent high. That recent high is not that far removed from the all-time high. So it is hanging in there quite well. But could you look back and in retrospect say, that was a double top? I mean, is it losing momentum here? Yes. I mean, it's stalled out now, right, for basically 2 weeks. If you look at the close of 82.53 on 5/15, here you are, right, 16 days later, and you're just pennies removed from that. So this thing's done a lot of nothing over the past couple of weeks, which means, right, the RSI is probably, right, definitely in a middle of the road place, which it is at 56. And so everything's sort of you're ready here too, right? You're ready to do something. You have to give it its due because it's above the 10 and the 15 and the 20, and everything's pretty much stacked again, right? You're stacked in slope, positive slope. So this is hanging in there. I'm willing to give it its due, but you have to note that you could be basically having this rounding top that you combine with this failure to ascend from this point over here, it starts looking like a possible double top. But you've got to wait and see. I mean, you could very easily, we're talking not much in terms of the dollar movement that it would require to push above these highs, which would be really close to this high. You could be very easily making new all-time highs from here. Just as right quickly, you could be below that 50 and in a bigger sell-off in the market. So that's not giving you that much to work with. You know, I think you're waiting for it to reveal what's next to you, as opposed to feeling like you've got a great beat on it now that, hey, that it's starting to embark on this, that, or the other thing. XLF, right? This is another one. See, this is a little problematic when you start looking at it in total, because XLF had I should say, had a false breakout. Oh, Thinkorswim's really up to its tricks on me, really, really slowing down. A lot of times when I do the Zoom and do the recording, it just becomes this super dogfight type situation where you're just really having to fight for just everything, even entering a symbol. But this clearly false breakout. They really put the screws the last few weeks to breakout buyers up here, reverse these things down hard. This is not stacked in slopes. Some of the SMAs are a little messy in the short run. You are eking out a close above the 50 if you can stay here or higher for the next 25 minutes. 50 there in gold. So we'll see about that. But overall, right, this is not a complete mess, because it still is keeping the higher high, higher low profile overall. Now what you have to, just like I covered really a macro measure in my mind, but I've got to wait for is, can it get back above all the SMAs and hold? Can it then attack these highs? Can it take those highs out? Or, right, is it going to put a wimpy bounce move together, not really with any conviction, and then roll over quickly with a lower high in place, right? Which is not what you would want to see. That would probably tell you that, yeah, there's a good chance that if it does make a new low, test the 100, that doesn't hold, you get a whole nother second leg of selling that would sort of, in a similar vein to this one. So that's it. You overall, we're calling it like we see it, like we always do. It just can't like the double top possibility. Can't like that. It's can't like it at the moment. Needs to do more work. Give it the benefit of the doubt for now. We'll see. Same thing here. This is sort of consolidating in real estate to correcting. It's like very slow consolidation correction type thing happening here. You could say, well, wait a minute, it's got the higher low put in. It very well may, but here this low, this high was a little bit lower. You get the idea. Now this thing really has pressure on it not to put in a lower high, right? Otherwise, it's maybe again an even worse rollover. So I think you'll obviously feel better about this above the 100-day. That'll pretty much put you above all SMAs all over again. You're not very far away. You're talking about 40 cents. Remember, though, it's not a big mover, so that's about 1%. But you will feel better about it there. It's already kind of, because these were falling, some of these sectors are already kind of experiencing this sort of reflexive bounce that I started thinking would be worth sharing. And I'm wondering now, because that's all that's been happening ever since I started to try to get these videos completed for everybody. I've got a lot of busy stuff happening with kids and sort of graduation-esque type ceremonies and stuff like that in North Carolina I've got to head to. But anyway, typical family stuff. Just it's all piling up. XLV, healthcare sector, right? Very similar to what we just discussed in terms of XLC. So XLRE, excuse me. So again, I would look out for what can this do now that maybe all these SMAs, which it fell below, could begin to act as resistance. If it can't shred through those things and really gets caught up in them and rolls over, right? Not a good sign. That means the SMAs, which again were very supportive during a strong uptrend, are now becoming very restrictive in terms of allowing it to upside movement, so taking on the resistance form, and then you're looking at problems from them maybe going forward. So wait to see if this does try to rally. Can it get through and do anything meaningful? And if it can't, not good, right? Because it did, I think, become short-term oversold. It should be able to put something together from here, given the kind of quick sell-off that it had for what it is. And if it can't, right, it's not going to act defensive when the markets are struggling. You wonder about it, right? You wonder what's going on there. That really wouldn't be a good sign. But as of now, right, it does have the higher low versus the April lows, and it's not dead yet. So we'll see if it can get back above there. We'll start feeling better about it. And if it can't and rolls over, I think you've got to be ready for a test of this low. That doesn't hold, then you're looking at, a test of those April lows. XLP. So yeah, this along with XLY both kind of rolled over hard. And this had been doing really, really well. Naturally, right? They spent 3 days here now toying around with the 50 SMA in gold. And this too has the SMAs waiting for it. The good news for it is that these are the three shortest SMAs that we keep on this chart. So these are not as stout theoretically in terms of the support and resistance they represent as some of the heavier weighted ones. It probably not seen as important as to a lot of people like the 50, 100, and 200 are. But still, the 20 is the 20, and I think it's a pretty good SMA to keep on your charts, which is why we do. And that would be a nice little improvement for it to be able to get back above those SMAs and kind of hold on the closing basis. And that would still be keeping that kind of higher high, higher low profile intact. Remember, though, if it fails here, rolls over, doesn't hold here, it's sort of testing it all over again. That's usually not a good sign. You're probably on your way to the 100, probably at that point. So again, a lot of these things are in flux, and you really can't. I don't think that's why I'm not saying be a bull, be a bear. I don't usually do that anyway, but right now I see this as more or less like a jump ball. You kind of have entered a corrective phase, and you're trying to wonder, is it just a little blip, or is there going to be something more to it? And you're mentally preparing for that, right? You're saying if it gets up to here and can't get through, can't hold above, that's a problem. If it rolls back over, it's probably breaking down further, especially if that happens quickly, right? If you see really a wimpy, reflexive buying spree, right, where it runs out of gas very quickly, that's going to be potentially a signal, not that they work every time, but potentially a signal that there's no appetite to buy right now. And there really should be, as we talked about in macro measure. There's three theoretically good reasons. Fourth year of the presidential cycle performance in the summer. The buybacks are still in place for big corporate buybacks until the middle of the month. And we're starting the beginning of a month, which is normally a good thing in terms of money coming into the market. But discretionary, right, this is a mess. And a lot of the consumer stuff that I saw and heard Ryan talk about this week, maybe Greg too, not good. I don't think it's good. I've been saying it for a while. Not that that matters as far how you're trading day by day, hour by hour, week by week, whatever. But just I don't think it's great out there. I think stagflation continues to evidence itself. I think that's concerning, and I don't know how that will play out in terms of the economic data, if that'll ever be allowed to show up. It's just a sense that I have from just seeing a lot of people struggling to say, like, this should really add up to this, but somehow the government's got it here. And of course, it's always rosier. Not just the government, it's other entities as well. It's just, again, I think just as time marches on, the egregiousness of the manipulation, the statistical torturing just becomes worse and worse and worse, to the point at which I can't even believe anyone really takes it seriously. You can't, right? You really can't discuss things in an adult fashion, in a serious, sober fashion, if you can't even really have legitimate statistics that are objective, right? How do you really assess anything with bogus or subjectively concocted statistics? But that's where we find ourselves. Unfortunately, that's the current state of affairs, and has been for some time. But this is not a good thing here, right? I would argue that you kind of have a little bit of a lower high put in. So back here, versus this rally attempt versus here, it's kind of subtle. Sometimes those are lethal, though. And right now, you're below most SMAs, with most declining, right? So if you want to base it on the chart stuff we're working with here, I don't like the look of this overall, right? I'm not pounding the table on, hey, you got to get bared up and get bared up now. But I do have to say that, to me, I don't like the way this looks, and I think it's in jeopardy, right? I think it's really in jeopardy at the 200 day. remember these big SMAs that every Tom, Dick, Harry, and Jane tend to look at. These tend to be where they do some of their best work. Notice the false breakdown below here and the jam job, right? If you overstay your welcome in a short, like I've said many times, you're in a bull market type environment and you overstay your welcome on a short, or you trade on an obvious breakdown, this is what these guys are really good at doing. Now, ultimately, were you maybe right that it doesn't look good in XLY land? You probably were in terms of your macro take on it, or whatever you want to call it, economic take on it, but analytical take on it, whatever. But it's, it is what it is. This is the game within the game. So again, false breakout above the 50, kill people. Now these guys, this is what they live for, which is why you've got to be disciplined. Exactly why you've got to be disciplined, because you might be right. There may be a time where it breaks below the 200 and keeps going. And it's completely possible. But many times, right, they're going to put you through the ringer before that eventually happens. Anyway, this is concerning. It's out of the danger zone at the moment. It's not near the 200. It would have to fall over 1% to get there, but not too far away, right? It's not too far away for comfort. With everything else declining here, I think it's concerning. With a lot of the stuff I heard being bandied about this week, I think it's concerning. So by Ryan, these are reports that they found online. So that's very concerning. XTN, this has been one of our canaries. This canary hasn't been happy in a while. They are putting together a reflexive bounce in this thing, though the last couple of sessions. So we will give them their due on that. But you can see the SMAs are really in a downtrend, right? These are down sloping for the most part. You've got you're below all of them at this point. You're hitting the 10-day right now in white. This probably did get a little oversold. You can see it was outside of my lower Bollinger right there. So this is reflexive. Maybe there's better prospects on the horizon for all I know. I think it was in seller control for over 2 weeks and got battered, and they decided to basically, because it got short-term oversold significantly, they decided to start covering. That's personally my guess as to what's happening here. And they also created a false breakdown scenario, right? Slightly lower low, make people think it's going to get worse, 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 and they're pulling off the usual hijinks, right? This is what they do. So I think you've got to wait. If this bounce does carry, look towards the 20-day and the 200, which are right near 78. That's not the out of the woods thing, but if it can't get through there, you kind of rolls over, like, okay, it's really this, and this is, you're in a rough market still where the major indices are struggling, or many sectors are struggling. That'll maybe encourage you to start looking for another rollover trade breakdown below something. But they've got a lot of work on their hands if they're going to right the ship in XTN. And to me, that remains not such a great sign for the economy overall. XLB, I'm going to be willing to give it its due. It's kind of, this talk about one that's got that profile of I'm ready to trade in both directions. Well, you could say, some people are going to say, well, I'm a bear because this has a lower high put in here versus here. Can't argue with you, it does. Some people are going to say, but yeah, this thing's been recovering. It's actually held up pretty well relative to its recent high. It's going to close the week strongly, could be back above all the SMAs with one decent session, and it's got a higher low put in versus these, and that person would be right as well. So this is really the jump ball, right? What's going to settle the argument, right? Let's go to the RSI, which is exactly near 50, or not even at 51. Even if you guys, you could round it up to 51, but it's right at 50. So you're reading it the right way if you're neutral. No matter what, this is what I've had arguments with people about over the years. A lot of guys, they think you're chickening out if you refuse to put a forecast together. I think it's sort of I feel like I encountered that when I was 5 and 6 years old on the playground, and I should never have had to encounter it, as an adult with some gray hair coming in, but you do. I just think that your goal is to try to be objective, and that's what leads to money making, not always having a forecast. So to me, right now, your best thing is to say, like, in a market that's overall had a rough couple of weeks here overall, despite making a new all-time high, which was narrowly led, this thing's hanging in there, right? Give it its due. But really, I think you have to, this is probably one where you've got to wait to have it show you something. And if, again, in a market that's rallying and reflexively rallying, am I willing to take a bullish trade and management? Sure. Right. If it starts rolling back over again and the market's really heavy and it couldn't even fight its way through the SMAs, much like it failed last week to do the same, I would be ready for more of a breakdown. But am I still fighting against the uptrend if I do take a bearish trade? I think the answer would be yes. The answer would be yes, because look at your long-term SMAs and look how long bears have been in control of this thing. It's for 2 weeks, right? They've had their time. It topped out 2 weeks ago. So, you know, they had their chance, they did their work, and now we've got to see what the bulls are capable of doing. And we'll go from there, right? But it's, to me, like forcing a pick on now. If UOA came in here, I would not put out an idea. All I would do with this one, and I don't trade this because it's not really a good trader, but I'm just using it as, I'm obviously just using it as an example. But what I would do on this one would be to say, alert time. I'm going to put alerts in there, and I'm going to reevaluate how this thing looks and how in the market that I'm operating in at that time, if it gets up towards here. So if it goes up a little bit more towards, say, 91.40, let me know. If it starts breaking down and it's below the close of, right, that strong reversal candle below there by a little bit, let's just say 5 cents from that close. What's the close there? 90.44. So 90.40 is close enough. Let me know if you get above or below there. And until then, I'm really not that interested, right? I'll start getting a little more interested at that point. But to me, that's a very tough call. XLI itself is a very tough call as well. It's similar but different. It has a little bit higher of a high. I'm sorry, a little bit higher of a low now. There it is. A little bit higher of a low than these lows, but it did get a little scary close to them relative to how XLC held up. It was a lot higher of a low relative to the former low. But this is right near the 100, right? So this is a great example again of what I would call shaving, right? If you see us put out a target level like the SMA, 100 SMA, which again is constantly being recalculated, right, as price action unfolds. If we initially put out a level of I don't know, maybe we put a bearish trade in here and we said, maybe I'll pick this ugly day here, right, the reversal day, and you're at 120.04. If you see us put that target level out, you got to account for the fact that that's still trending up. So what was a target, it's a moving target, right? So it will be somewhere higher given the math of how the 100 SMA works out. So you're still not really waiting for 120.04. Right, you're waiting for whatever it is currently, right? And then to that I would add the shaving factor, right? I'm not going to really wait with everybody else right at where there's been flatline support, right at where the 100 SMA is. I'm going to cheat it a little bit, and I'm going to be waiting, right? If I can watch it, right? But either way, I'm still going to cheat it up a little bit because I know I don't want a lot of company where I'm bidding. I want to get ran over. But if there's a lot of company there, that means the only way I'll probably get it is if they really want to smash me and give it to me because they're planning on steamrolling me, right? So that just gives you the idea of the mindset, but it's something you could bring up with Ryan and Greg. So XLUs are last on the grid of 12. Like I said, this has been really strong, textbook corrective activity, right back at it again. Right near the highs. All it will take is a little bit more push. You could be embarking on another leg, much like this one, somewhat similar. So again, I would nothing to fight against quite yet. I do think we kind of picked something to kind of give it a little bit of a pullback potentially. Every now and then I'll sprinkle that in. I don't think it developed though. It might have pulled back a little bit, but I don't think we were still around for it because it was either then or very short-term trade idea. Either happen now or we don't care. One like that though was ADI. Just to give you an idea, right? This is why it's hard because I think there's more potential, just like everybody else due to this gap fill potential. But we put a bearish idea in on this one. It did pull back. I'm assuming, I think people probably did okay with it. It did put a decent little pullback together. But right when you get to a strong stock, when you get to support, which in this case is the rising 10 SMA there in white, it just doesn't crack it, right? It really need more to crack. So that's why it's hard. Another reason why it's hard to make money going counter trend in a bullish environment. And right now, at the end of the day here, they're putting a real goose-a-thon together. So they must have had some people on the ropes, and they're really squeezing here strongly. So or some news came out that I'm unaware of, but yeah, there's some real shenanigans at work. We should look at XAU. We have looked at that. We'll look at SMH as well, and then we'll start getting ready to wrap up here. But this is holding its trend, right? It's got the higher high, higher low complexion still in place. You want that profile to stay there. Obviously, if you're a bull, you've got your stacked and slope SMAs, and you've got holding on the 20, which is important, and then you're there, right? So all this story needs is to get a little bit more of a boost, and then maybe it takes another run. But it's obviously holding on nicely. I think below the 20, right, you start to get a little worried about it. That's when you start having like flatline your 141, so on and so forth. But those, that's where your XAU is. Well, I'll take a look at, I tried to do SLV, but I might have to cut this short. Somehow maybe it was out of habit that I typed XLV, SLV, which should also be a habit, really, but who knows what I did. I'll blame myself for that one. Not all this is my fault though. But yeah, SLV, right, being SLV, double topping coming off, obviously gap here, 20-day right near the gap. Every Tom, Dick, and Harry and Jane will be bidding near there, but that is an obvious place for this to come to. That doesn't hold. Sure, you got other flat lines sprinkled in there, but then you're looking at the 50. But I mean, look, it had an incredible run. To have a little bit more of a pullback isn't the end of the world. Good pullback like this leads to another good leg. That's how I always look at it if it's a bullish market. So if you get that and the 50 rises up to here and you pulled back for another week or so and then you're ready to go, not the end of the world, right? I like things like that because that lets you get many low risk entries because you're not really, you got a nice corrective activity that your overboughtness has been backed off. Gold looks vulnerable clearly right at GLD at the 50 there. So just be careful. Remember, you're going to have plenty of company if you're trading a breakdown there, but them tamping down gold and silver is about as old as the dirt itself that the gold and silver comes from. So I'm a little more likely to believe in a breakdown there because the powers that be enjoy that immensely, apparently. And apparently it's very profitable. Don't know how it all works though, because I'm not part of the club. For some reason, SMH isn't coming up. Oh my gosh. This might be our last chart, gang, because this thing's turned out to where I think wow, yeah, this is bad. But false breakout. Just remember to be nimble here, though. Almost got down to the 20, didn't quite make it. Gang rescuing things in a big way, trying to preserve everything. It's absolute shenanigans here at the close. Typical gang stuff. You've got the 10-day that they're trying to hold on to desperately. So whatever happened, I don't know in terms of the news. It could just be market internals, could be right them getting something. I'll have to just check it after the close, and that's why I try to do these after the close, but that doesn't work. It's very hard at this point with what I've got going on personally, so I'll have to keep trying to do it this way. But yeah, they've held on, right? It would be a very healthy backup here from a bad situation and a false breakout and reversal to kind of hold here and then go. Notice, right, that if they're able to do that, they won't really be all that far away. They're only right a few percent away. And the way this thing moves, it could be right back at the highs. But I think, right, but breaking below the 10, which is where it looks like it's going to close, I'd be more inclined to think it still has more downside. If it breaks below there towards that 20 there in light blue, they hold it here and they go. You've got to be ready for a lot of different things. You've got to be ready for the lower high. You've got to be ready for the double top. You got to be ready for the false breakout all over again, right? You got to be ready for the real breakout. You got to mentally prepare for all those, but that's what we're staring at. This is clearly the leader. I think the charts here look good. I think they're at risk of putting together a little bit of vulnerability, and I think they're scrambling like hell to prevent the chart from reflecting that way. So they're really on the edge of a little bit of negative developments here, the way that I see it, with some other views. And I think what they'll do, that's why they're scrambling so bad, I think, to just save the technical profile. So we'll see how it ends in 2 minutes, but that's that. Probably look at XHB. No, we already did look at XHB. I'm trying to think if there's anything else I can look at here sector wise that we typically cover, just to try to throw a few 2 cents in there. No, I think that's it. So I think I'm going to wrap it up on that note, especially with Thinkorswim really hitting me hard with some body blows in terms of performance here with Zoom. It's just a bad combo for me for some reason. Maybe Santa will bring me a new high-powered PC later this year so I can run all my screens too, since the video card's giving me trouble. But I just got to get around to putting another one together, just getting the components and building one. Anyway, on that note, I'm going to wish everyone a wonderful and safe weekend. Have a great time. First weekend in June of 2024. I hope something I shared with you helps you out this upcoming week or some week in the future. I want to thank everyone for tuning in, and take care. I will be in touch through the usual channels next week. Thank you.